TK coming at you with Master Wealth Builders LLC, and really today I wanted to break down the mechanics of how you apply an IUL, a index universal life insurance policy, to your life, or how do you use a policy to benefit you. You know, if you're new to insurance, I don't want you to feel overwhelmed. The process is really simple. It starts with a Zoom consultation where we do a needs analysis. Needs analysis is simply you on a phone call where we take a snapshot of where you are, talk about where you want to go, and, you know, get a general idea of your goals. So from the needs analysis, we transition into a illustration based on what you tell me. We go into solutions, what your money looks like if you put it into X, Y, and Z. So we give you one or two choices to place your money. And then once you look at an illustration, if you like what you see, you move into application. This is an online digital application. You just fill out the application, sign the illustration, then sign the application. And then typically in about 7 to 10 days, you're issued a policy. And once you pay your first premium, that policy is now in effect, and your family has coverage. So that's why you always see me say schedule a consultation or hop on a Zoom link. A lot of people respond from my posts and they'll say, send me more information. I have a video feed which I can plug you into, which shows you some examples of practical applications. But, you know, when it comes to life insurance, there's no more information to read. It's a needs analysis, an illustration, and then it's an application. So if you're on a fence and you're trying to figure out what to do and how is it applied, that's all it is to it. You simply look at where to place your money, fill out an application, and then you're covered. But in terms of a universal life policy, I want you guys to understand that the application phase or using it is simply paying your premiums every month. Once you pay your premium every month, you have cash that builds in an account. That account is credited on an annual point-to-point participation rate, and it is used in an indexed, or your crediting is used based off an index where it's a barometer to determine what gets credited to your account. Now, historically, these accounts have been performing from anywhere from 6 to 8%. So you're going to get that compounded every year. And over time, your account grows. So the idea is to pay your premium every month, which is a form of investing in yourself. And it's a form of covering your family in case something happens. It's a protection plan. And the other idea is to max out your policy in addition to paying your premiums. So the strategy behind that is to accelerate your growth and to take advantage of tax-free accumulation. So what happens is every policy has a MEC limit. It's the maximum amount that you can contribute into your life insurance policy. So in addition to paying your premiums, you're going to take extra money, bonus, tax return, you know, any extra money that you have to contribute to that MEC limit. Now, typically MEC limits are anywhere between $10,000 and $20,000, depending on the amount of coverage that you have in your policy. But you really want to do that so that it doesn't take 20 years to get to the $1 million growth strategy. Because I talked about it multiple times in terms of you can grow your life insurance policy to $1 million in cash accumulation and life insurance coverage but you have to aggressively invest in your policy. It's like not paying the minimum on your credit card, but paying extra so that you can achieve your goals faster. So that's the strategy. You pay your premiums every month, you add additional monies, and you're going to benefit better than saving, say, in a bank, right? Or saving in a 401k. Why? Because you're not actually participating in the market. The index, whatever index you use, the S&P 500 in this example, is a barometer to determine how much get credited to your account. So you're safe because your principal is protected. And you have tax-free accumulation because as your account grows, you're able to take loans against that cash value. So a loan is a perfect strategy to access equity in that account and still save in a tax-free situation that credits more than typical savings or what you will experience in a 401k with the volatility, because of course if the market goes down, so does your account. So it's the protection, and it's the tax-free growth, and it's the ability to borrow against it in the future that makes financial sense to use a index life insurance policy or an index annuity as a long-term savings as opposed to other savings methods. So I really want you guys to understand the mechanics and what it takes to do this, right? So you can do it as aggressively as you can afford, right? Put as much money as possible. The younger you start, of course, it benefits you because time is a part of that accumulation phase, right? It's the same thing as if you was to save for 20 years in other mediums, but you're going to benefit more from this medium because of all the other things that comes with having a life insurance policy. You know, the modern policies have so many other benefits. You're able to set up protection for your family, but you're growing your money in a safe medium. So I really want to change the face of insurance, get you guys involved. Please use the link in my bio to schedule that Zoom meeting. Let's take a snapshot of where you are, and then let's get you set up with this form of savings, this form of investment, because it will outperform in the long run. And there's no other place where you can get a tax-free accumulation, right? You know, if you take money out of your 401k, you're going to get taxed. If you take money out of your IRA, you will get taxed. This is a smart strategy. So click the link. Let's get started. Let's get more people covered. You know, statistically, the Black community doesn't have a lot of people who take this serious. I really want to change that. It's up to you, though.